Right lads, let me walk you through where we are right now. And I mean properly walk you through it from the daily all the way down to the lower time frames, using the CCA engine the whole way. Let's start at the top. On the daily chart, the higher time frame bias is still bullish. We're above VWAP, RSI is sitting in healthy territory, and the daily oscillator has been building momentum since the April lows. That recovery has been clean. Higher lows, structure improving, and the momentum lines on the daily are pointing in the right direction. Now the CCA signal on the daily isn't showing full confluence yet, which tells us we're in a developing situation rather than a confirmed breakout. That's fine. That's actually normal at this stage of a recovery. The key takeaway from the daily is that the higher time frame trend hasn't broken. It's rebuilding. Keep that in mind for everything that follows. The 4 hour is where it gets more interesting. Both LTF and HTF bias are reading bull, we're above VWAP, and the 4 hour oscillator has turned. After spending most of last week below zero, it's now pushing up with the momentum line starting to curl positively. That's a meaningful shift. The 4 hour isn't screaming high conviction yet. Pressure is still showing some chop and volume is on the lighter side. But the direction of the oscillator is constructive. It's moving the right way. The squeeze is still on, which means when this market does decide to move, it's going to be sharp. On the 1 hour, same story. Bull bias both ways, above VWAP, RSI in the mid to upper 50s. The 1 hour oscillator had a strong push up earlier in the session, pulled back mid-session as price consolidated, and is now trying to recover again into the evening. The score on the 1 hour is building, but not yet at the kind of level that screams full conviction. What I'd want to see is that oscillator hold above zero and start trending rather than the choppy spike and fade behavior we've seen for most of today. Now the 15-minute LTF and HTF both reading bull above VWAP, RSI mid-range. The 15-minute oscillator had its big push early in the session on the morning spike, faded through midday and is now curling back up. The pressure is still showing chop, which means we're not in a clean trending environment on this time frame yet, but the direction is improving. What I need to see from the 15-minute to get interested in the long is a clean hold above zero on the oscillator with momentum following through, not just a wick above and a reversal. The 5-minute, as always, is the execution time frame, and right now it's pointing in the right direction after a tough mid-session. The oscillator bottomed out around the 1500 to 1700 window and has been recovering since. Volume is picking up slightly compared to the dead period in the middle of the day, which is mildly encouraging. So here's what the CCA engine is telling us when you put all of that together. The higher time frames, daily and 4 hour, are constructive and improving. The 1 hour has been making progress but still hasn't fully committed. The lower time frames are recovering from a mid-session fade but haven't fully confirmed a clean direction yet. Taken together, this is a market that's leaning bullish but hasn't fired the trigger. Now let's look at the actual price action and what matters on the chart. Price is sitting just above 78,000 right now. We've been grinding in this range for most of the day, capped at the upper resistance zone around 78,150 to 78,200 and supported in that 77,850 to 78,000 area below. Every push up into the top of that range has been met with sellers. Every dip into the lower end has been bought. That's compression. And compression resolves, usually sharply, usually when you're not expecting it. The level I'm watching most carefully to the downside right now is 77,650. That level is held on every meaningful test, and it's marked clearly on the chart. If we get a clean close below that with conviction and follow through, the read changes. And I'd be watching 77.2 to 77.3 next, and 76.9 if it really breaks down. To the upside, the trigger that actually matters is a clean close above 78,750 on the 1 hour with real volume stepping in behind it. Not a wick, not a sweep and rejection. A proper close above, followed by a retest that holds. If that happens, the squeeze above starts to open up towards 79,000 and 79.2. And that's where there's a meaningful pocket of short liquidations sitting overhead that would add serious fuel to any move. So what's the actual trade here right now? I'd only be interested in the long if price dips back into that 77,850 to 78,000 area and defends it convincingly. Oscillator holding above zero on the 15-minute. Buyers showing up with some actual size and price snapping back quickly. If it does that, I'm looking at 78.2 first, 78.750 if it gets legs, and the 79 to 79.2 zone if the squeeze really gets going. If the bounce stays weak, price stalls back under 78.150, the 1 hour oscillator rolls back over and we start losing the structure. Then the short becomes the play. Not by chasing, by fading the failure. 77.650 breakdown is the short trigger, 77.2 to 77.3 is the first target, 76.850 if it gives way properly. But right now, in this moment, the engine is still saying, wait, the higher time frames are improving, the lower time frames are chopping. That combination means you don't force a trade. You let the market come to a level, let it confirm, and then act. The traders making mistakes tonight are the ones who need to be in something right now because they're bored or impatient. Don't be that person. Stay patient. Watch the levels. Let it prove itself first and then hit it. We're watching. Stay sharp.